With U.S.-China relations taking a step forward, the two countries reportedly agreeing in principle to a broad outline to settle its dispute over Chinese telecom giant ZTE. According to the Wall Street Journal this morning, if the deal were to happen, the U.S. will lift its ban on American companies from selling components and software to ZTE. In exchange, ZTE will be forced to make significant changes to its management team and possibly pay hefty fines. Joining us right now to talk about that and a lot more is the chairman and CEO of Cisco, Chuck Robbins. Chuck, it's good to see you. Thanks so much for joining us.
It's good to be here, Maria.
From your experience in terms of operating in China, what are the barriers that American companies face today?
Well, I can only speak from our perspective, and actually we've had pretty good access to the company. To the country. We've had no real issues relative to IP theft since the early 2000s when we had some issues with Huawei at the time that have been well documented. But in general, for us, it's about just open access to the market and being able to take our technology and position it with the public sector customers, the large state-owned enterprises, as well as commercial customers, service providers. So that's the most important thing to us.
Do you feel like you have a fair shot in China? Do you feel like you do get access to that market?
I think in general we have been treated fairly in China, actually.
Okay.
We've not had any pressure for technology transfer or anything like that. Now, again, I can't speak for others, but that's been our experience. So.
You've had a great quarter. You reported earnings last week. Let's talk about the quarter, what drove business. What can you tell us in terms of IT budgets and spend on networking?
Yeah, so first of all, thank you. Our quarter was very strong. It was another quarter of continued momentum from a growth perspective. We had a record quarter from earnings per share, record quarter for capital returns. Obviously, we have two of the big things that I wanted to accomplish when I became CEO was to really transform our business model to one of more software and subscription, and also to drive more innovation back into our core franchises. And, we're almost up on the one-year anniversary of a new platform that we built in the core that has actually been the fastest ramping product in the history of the company. So that's doing incredibly well. And our business model transformation continues to accelerate with, significant growth in our software and subscription business.
What does that shift more toward recurring revenue, the subscription base, look like for Cisco?
Yeah, it's a great thing because the reality is that our customers want to consume our technology in a different way. They want to consume it more as they use it as opposed to buying everything up front. So we've been transitioning those aspects of our portfolio which line up with what our customers would like to see, and it also lines up with a recurring revenue model that our investors like because it provides a more predictable financial model for us over time.
So what are you expecting then for the rest of the year and going into 19 in terms of budgets and spending on this?
Well,
from big corporations.
Yeah, right now we saw actually broad-based strength across our large customers, our mid-sized customers. We saw reasonable strength in public sector. We still saw continued weakness globally in our service providers, the telco segment. But it was consistent geographically. We saw actually good growth in emerging countries, good growth across all the regions. So right now, I think much like we talked about in Davos, it just feels like there is a consistent, solid economic scenario that we're dealing with across the world.
So do you think managers are increasing their budgets then? Because for a long time they were sitting on cash. And have you seen a change in the last year?
Well, the reality is that technology has moved so far beyond IT, and every company, every city, every country around the world is really looking at how technology changes and creates new strategies for them from a competitive perspective, from an economic development perspective. So it's hard for me to imagine a future where technology won't be a priority and spending on technology won't be a priority. So right now I feel very good about where we are. I feel good about the role technology is playing in these organizations.
And you're actually seeing an increase there then?
We've seen a lot of strength. I was asked on the calls, can you delineate how much of your success right now is coming from, just better execution inside the company versus the economy? And obviously it's very difficult to ascertain, but I think both of those things are certainly helping us right now.
Does it feel like the policies out of this administration have been helpful to some of your customers in terms of the rollback in regulation and the tax reform plan?
Oh, absolutely. I think whether you look at the regulatory environment, reducing regulations allows them to move faster, focus on, growth initiatives as opposed to, reporting efforts. Obviously tax reform, lowering tax rates, capital returns with repatriation. All those things are good for business, and I think you're seeing that play out in the U.S.
Let me ask you about repatriation at Cisco. You brought some money back in the quarter. Tell us how you're allocating capital right now, and was it partly the tax reform impact that got you to bring some money back from overseas?
Well, it was 100% the tax reform impact that enabled us to bring back $67 billion, which we've completed. And I think it's as we think about our capital strategy, it doesn't change. It just allows us to accelerate it by having access to that cash. So we have had a long-standing commitment to returning 50% of free cash flow through dividends and buybacks. We actually raised the dividend last quarter. We increased our buyback pool to $31 billion. We bought back $6 billion worth of shares last quarter alone. And we also have always been acquisitive, and this gives us lots of access to our cash relative to M&A.
Yeah, talk to us about the acquisitive part of that, because a lot of people have noted that, the analysts, of course, the acquisitive nature of Cisco and where things go next. So are there areas that you would like to build up through acquisition in the coming year or two?
Yeah, well, first of all, our acquisition strategy didn't fundamentally change when we gained access to this cash, because the debt markets have been so accessible that we've been able to do anything that we really wanted to do. So our strategy hasn't fundamentally changed. It just makes things simpler now. And if you look at the areas that we're focused on, I mean, security is a big area that continues to be at the forefront of how we think about expanding our portfolio. There are lots of technologies that we're looking at relative to enabling our customers to navigate this complicated multi-cloud environment that they're trying to deal with, where the network plays a more important role. We have a lot of internal innovation that we're driving in that space, but there's also assets out there that we may choose to acquire. So it's across the portfolio.